In this video, I'm going to talk about the easiest way that I know of to pay down debt twice as fast. It's exactly what my wife and I did to pay down $43,000 in a year, and now we have a $1 million net worth. So my name's Chris. I've been an accountant for 10 years now, and I help people like yourself pay down debt twice as fast using this strategy and these files, which I'm about to go over in this video. To follow along, make sure to check out the description. You're going to find the Personal Finance Level Up Kit. It includes the debt payment calculator, another tool that we're going to talk about today, and then 2 other bonus tools that you'll also get completely for free. So now that we're in the debt payment calculator, the first thing you're going to want to do is go up to File here to make a copy for yourself. So you can go to File, Make a Copy, and click on your folder. And if you don't see it in Suggested, go to All Locations, My Drive, Select, and make a copy. Here's the debt payment calculator, and I've already input some, fake information here, but this is how you're going to do it. So step 1 is list out all of your debt information. So we're talking creditor type, the balance for each of the loans, the interest on each of the loans, and the minimum payment owed for each of the loans. Now, this creditor type, feel free to put whatever you want in here. Instead of credit card 1, you could do Amex, or you could do the company of the loan. You could just do a generic thing like I've done here, credit card, personal loan, student loan, whatever is easiest for you. The current balance here will total, so we'll see $40,000. And the minimum payment will total here, which is $300. Now, the next step I want you to do is enter the monthly payment amount that you're paying for your debt. So for this example, let's just say we're paying off the minimum credit cards every single month, okay? So we're entering $300. And this is important because these steps are going to allow us to understand where we stand currently in terms of how much interest we're going to be paying over the life of the loan, and then when we become debt-free, which is important to figure out how to pay down your debt twice as fast, right? So we scroll down to the calculator portion of this section, and you see it kind of lists out the information again. So we have the creditor type, we have the balance, and now we have interest paid. So based on the information that we entered up here, this is calculating everything, and our total interest paid is $27,000. Here's the months to pay off each of the line items, and then the approximate date of when you would become debt-free, which is November 2042. Ouch, I'm recording this in 2024. Okay, so in 18 years, $40,000 will be paid off when you're just making your minimum payments. Now, there are a couple strategies that you can use to pay down your debt. The first one is what you see on the screen here, which is the avalanche method. And let me just scroll up to the top so we can see both sections. The avalanche method is where you pay off your highest interest rate first. So you order it from highest interest rate to lowest interest rate, and the calculator does that for you. The benefit to this is, since interest is such a killer, getting rid of your highest interest rates will almost always make it the most cost-efficient method for you. And the other strategy that we want to talk about today is the snowball method. So I'm going to click on that, and you see that the formula shifted a little bit there. The calculator realized there was another strategy. So the snowball method, you're going to be ranking your debts in order of smallest balance to largest balance, and you're going to be paying them off in that order. So the strategy for both of them, the avalanche and the snowball, is you make minimum payments for the other loans, and you put the rest of the money that you want to pay off towards your smallest loan with the snowball or your highest interest rate with the avalanche. So we can kind of quickly compare these. So the snowball method, we have $29,000 worth of interest, and our debt-free date is May 2043, right? So I don't think those numbers are as good as the avalanche, so we'll just remember them quickly. 29,000, May 2043. Yes, so we have 27,000 for the avalanche, and November 2042. So about $2,000 in interest, and what is that? About 6 months of time that you're going to be still paying it off. So right now the strategy is the avalanche method, but how do we go from where we are to cutting it down in half? So technically, cutting it in half, we would want to get to, since it's 18 years from now when I'm recording, to 2042, November of 2042. That's 18 years. So we want to cut it in half to 9 years. Okay, so we have to figure out, we have to play around with this monthly payment amount and see what number sort of gets us to that mark. And then we need to reverse engineer it and go to the other tool that we're going to talk about in this video and figure out how we can find that extra money in our finances. Okay, so let's play around with this first. And I think once you see this, you'll understand why it's so important to, if you have debt, to pay it off as quickly as possible, push as much money as you can as possible, because just adding an extra $100 to this, let's go through the math here. So I'm changing the monthly payment from $300 to $400. Currently, the interest paid is $27,000, and the debt-free date is November 2042. So I'm going to hit enter. And look at that. We just got rid of $13,000 of interest, and we cut off about 7 years of being in debt just by adding an extra $100, guys. That's it. 7 is not quite 9 years, so let's just play around with the numbers. What if we added, it would be $150, and that essentially gets us to where we want to go. So December 2033, it's 9 years from now and 9 years from 2042, and the interest went down again to $11,000. So look where we started here. I'm going to type in $300, okay? Look at the interest paid and the debt-free dates, how they dramatically shift, right? That's insane, and it was an extra $150 a month. Now, you're probably sitting there saying, I am putting all my money towards my debt that I can possibly put, and I just don't see an avenue of where I can find $150. That is where the second tool of this comes in. All right, so let's jump over to the, you guessed it, budget template. Okay, so same thing applies to this. Go up to File, make a copy, and do all this stuff with the folder to save it to your Google Drive, because you will not be able to edit this until you make a copy. This file is also in the Personal Finance Level Up Kit, which you can find down in the description. This is our budget here. This is our budget template, and this is what we're going to work our way up to, but we have to do this one step first, and it's called the 3-month look back. Okay, so again, I'm recording this video in September. What we want to do is look at our June, July, and August spending for our variable expenses. So think groceries, gas, utilities, things that we use every single month, we spend money on every single month, but the amounts fluctuate, okay? So think about like your mortgage, your rent, that's pretty fixed. You know what that is. If you have childcare, that's likely fixed. There's other things in your life like Netflix subscription, that's likely fixed unless they keep raising the prices, right? But you get the point. So this section here, we just want to look at the variable expenses, because this is where you're likely going to be able to find extra money in your budget and in your finances to put towards a financial goal, which in this video, we want to really focus on the debt, okay? So what we're going to do is you want to look at literally every transaction that occurred in these 3 months. Now, this is going to be a pretty heavy lift for you. There's going to be a lot of effort involved, because you're going to want to look at your bank statements or your credit card statements, however you spend your money, wherever the transactions are coming from, and enter them and add them up, okay? So we're gonna do that for all 3 of the months, and let's just pretend we just did that exercise, and voila. So I just added the expenses to each of these categories, and just for clarity, these categories can be changed. So I just put some generic ones here that I thought most people would utilize, but you have about 20 sections here. Feel free to mix and match and call it whatever you want. Again, this is your file, so do whatever you want with it. Doing this 3-month look back should give you a really good idea of where your money is actually going, because I think there's going to be a disconnect of where your money is actually going and where you think your money's actually going. And I think when people think of budgeting, they automatically think that, oh, this is going to be some restrictive thing. I'm going to have to cut all my expenses. I'm going to have to do all these things and like change my lifestyle. And I think that's why a lot of people don't budget. But I want you to think of budgeting as being intentional with your finances, with your money, and just with your decision making in general, okay? So once you start doing this exercise, you can really start to see if your money is going to the life priorities for you, your financial priorities, and you could tell pretty quickly what's been happening with your spending and where maybe an oversight has been happening of, oh man, I'm spending way too much here and I can easily cut back. Okay, so we're gonna go through a couple examples. Let's say this groceries line item. We went through the 3 months, so June was $500, July $500, August $650. Now, just quickly, make sure you're putting your actual numbers here. These look estimates because I just did something quickly, but make sure you're putting your actual numbers here. So our average for groceries was $550. You do this for every expense category. You look at how much you're spending, and then you see if it aligns with your financial goals, if you think you need to cut expenses, if for some reason you think you need to add more expenses, okay? So in this case, let's say groceries, $550. Let's say you think about it and you're like, you know what? I shop almost exclusively at like this very expensive grocery store, and I could probably take a step or two down on the grocery store that I use, and I could easily save $50 a month, and I think that's very reasonable just from going to a cheaper grocery store. What you're going to want to do is in this column, H here, you're going to want to enter what you think your new budgeted amount would be based on how much you've spent so far. And again, I'm just going to pretend like I did this exercise already. Voila. Okay, so I just entered what my new budgeted amount will be. Now, you'll see for groceries, like we talked about, I think we could save $50 a month. The most important step of this exercise is the next column, column J. This is what action will you take to make this happen? Now, anyone can just say, I want to save an extra $50 in this expense category, and I just think I'm going to do it. And it's just easier to just say a number, but without an action behind it, nothing that you can stay consistent with or keep yourself accountable. It's just a number at the end of the day, and you need to have an action plan for it. So in this section, you're just going to write, yeah, I'm just going to go to a cheaper store. Boom. That's my action item I'm going to take to make this happen. I'm not going to go through all these, okay, but I do want to give you another example. Let's look at this health and fitness, right? So you look at these expenses and these are the same price, but let's say it fluctuates slightly every single month and it averages to $30 a month. And you're like, you know what? My health and fitness is so important to me. And I just feel like I'm not doing enough. $30 a month, I'm not making it a priority. So I actually need to, take more classes or whatever the thing is. And I need to probably double it to $60 because it's just so important to me. So you'll see what happens here. In this new budget for health and fitness, we upped the amount of money that we're spending to $60. And obviously you can see here this monthly savings column. So anything that's green means that you saved money from your last 3 months to your next budgeted period, okay? Which in this case would be September. So green means you're saving money, red means you're spending more money. And again, that's okay as long as it aligns with your financial goals. If anyone ever tells you where you should be spending your money, I wouldn't listen to them, okay? You're the one in charge of your personal finances. It's personal finances for a reason. Personal, right? Whoever's finances it is makes the decisions and you decide where your money goes. Now, the elephant in the room, right, is the less you spend on other stuff, the more you can put towards a financial goal, right? Like paying down debt, and that's just a fact. But at the same time, you still have to live somewhat comfortably or happy or, do a couple things on a weekly basis, whatever, that make you happy. Like maybe going to the gym, right? You get a good sweat and you're feeling good and you're like, you know what? I'm so happy. I'm spending more money at the gym. So we'll do the same thing here of what action will you take to make this happen? We're going to say more classes. I will take more classes to be paying more money, and that's what I'm going to be doing. We add up all the numbers. As you can see here, it totals down here to $131.67. And you're like, okay, that's pretty cool. And then on an annual basis, $1,580 that you're saving just by doing this exercise, okay? You didn't make more money. You just sort of looked at your finances and you assessed where your money was going and you decided if it was important to you, was important to your life goals, your financial goals, okay? That's all we did with this, which is pretty incredible. But if you remember, we needed to add $150. While this exercise was great and the $150 is our goal, okay? So if you're okay with the 131 paying towards extra debt, then that's fine. If not, we'll look to find that extra, $18, $19. But either way, this is the strategy. And now what you're gonna see is these variable expense categories are gonna roll into our September budget. So basically what you did here was you created a budget for your variable expenses just by looking back the last 3 months. You got an average and then you had an idea of how much you should be spending or want to spend in these categories going forward. So if we click over to the monthly budget tab, you're gonna see that the variable expenses carried over. Now let's walk through this entire file just so you have a pretty strong understanding of what's going on. So this top section here is sort of the summary. This total budget is calculating the expected income that you're going to make. So let's just say you have 2 paychecks and they're $2,200 each, right? Something like that. You can see the total budget going up, and it makes sense because the total budget that you have for each month should be based on the money that you're bringing in, not extra money or less money. Like it needs to be the exact amount. And this strategy is called zero-based budgeting, okay? So every dollar that comes in, it needs to go out and have a strategy and a place that it needs to go. And it's already pre-planned because it's gonna be in your budget. And we're gonna walk through all of it right now. Now you'll see this remaining to budget section, okay? So what this is doing is taking our total budget of $4,400 and it's subtracting all of the budgeted amounts that we've already put in. So you'll remember when we did variable expenses, this section was $1,000. Now, we obviously don't have anything else budgeted for yet, and we will in a moment. But right now it's taking the total budget minus all the budgeted amounts that we have in this section, which is getting us the $3,400. Here's how this section works and how these colored sections work. Red means bad and green means good, okay? So what this is saying is you still have $3,400 that you need to budget. So if I were to just do it in one example here, I'll put $3,400 in a budget section and voila, now we have $0 to budget, okay? So now it turned green, green is good. So I'm just gonna remove that for a second. And we're gonna talk about the leftover money and the actual spend at the same time. So leftover money is looking at our total budget and it's subtracting the actual amount of money that we've paid towards each of these categories. So you'll notice that in every section, In the fixed section, variable, financial goals, debt type, there's a budgeted amount and an actual amount. So the budgeted amount is what we expect to pay for that month, and the actual is what we actually paid for that month. So the fixed expenses, which we'll get into in a second, the budget and the actual should be the exact same because we should know what that amount is. The variable expenses, you're going to probably have some differences. You're definitely going to have some differences based on like decimals and things like that. And that's totally fine. But that's what this leftover money does. Now, just to show you how this works, red meaning bad again, right? So if we just put $4,400 somewhere, boom, leftover money, zero. Now we have zero money to pay from our budget, which is good. And you'll see that this actual spend also changed. And this is just basically showing how much we spent during the month. Okay, so they're kind of linked together. So this turns green when it exactly matches your total budget. So again, the whole point of zero-based budgeting is every dollar that comes in, you want to spend every single dollar and have an idea of where it's going. Now, if we were to spend one more dollar, both of those now turn red because we spent one more dollar than our budget. And of course, we have -1 leftover dollars. So if this sounds like you're going to make, $4,400 a month and then you're going to get rid of $4,400 every month, it is technically true, okay? But again, the goal is hopefully we can find extra money within our budget where we can put towards a financial goal, like in this example, debt, okay? Paying towards our debt. All right, guys, so off camera, I just added some budgeted amounts for our fixed expenses, as you can see here. Didn't want to waste your time with that. So that totals $2,670. Now, you'll see that up here, some of the numbers did actually change, right? So remaining to budget, we added more money to our budget. So it went down to $730 left to budget, okay? But we're actually in a good spot because let's assume that we've entered all of our fixed expenses for the month, all of our variable expenses for the month, and now we have $730 left to put towards a financial goal, okay? So financial goals like paying down debt, which is the focus of this video. There's also the emergency fund, child's education, retirement, etc. And this is where the strategy and the thought really comes into what you should be prioritizing and why. Again, this comes down to what is the most important thing for you right now and how much money should you be allocating towards it. What I like to recommend is if you don't have an emergency fund yet, I would start building that up pretty slowly and, chunk it at a time. I don't want you to get overwhelmed because when you look online and search for how much money you should have in your emergency account, almost every article says 3 to 6 months, 3 to 6 months, 3 to 6 months. If you were to just take this budget, for example, and you added these expenses, so $2,670 plus $1,000, so $3,670 times 3 or 6, I mean, you're looking at like $10,000 to $20,000 for an emergency fund. Now that sounds very intimidating to put together, and that's probably why a lot of people don't have it, because they don't think that they have enough money to have one. But you could just build it up slowly, and it all comes down to how much money you think you need to have to start. Okay, so what's the dollar amount that really just covers almost all of the expenses that come up out of nowhere, right? So you have to get a new tire, something broke in your house, whatever the thing is, right? So what's that threshold for you, and what's the dollar amount? Is it $500? Is it $1,000? Is it $2,000? So that's up for you to decide, and you can add up slowly, okay? So I think when we went back to our debt payment calculator, all we needed was $450 to cut our debt in half, right? So we were paying $300 and we added an extra $150, but let's just say our emergency fund is at $2,000 and we feel pretty good about that, so we don't need to add anything there, and we really just want to focus on debt. So let's just say remaining to budget $730, and I don't remember the breakout, right? But I'm just going to put this in one of the categories and we'll go through it in our budget file here. So let's just say for debt, we want to budget $730, and I know it's a credit card, student loan, personal loan. We can sort of just ignore the breakout for a second, right? But let's say it's $730 that we're putting towards our debt. Now, let's look at the numbers below, right? So with $450, we're paying $11,000 in interest, and December 2033 is the debt-free date. So I'm going to hit enter, and it just like literally cuts it in half again. So $6,000 of interest is all we'd be paying, and our debt-free date is October 2029, which is way cooler than 2042, okay? And that was just a difference of $300 a month to $730 a month. Again, you're probably sitting there like, I don't have the money to pay down this debt and add all this extra money to my debt. Do the 3-month look back, okay? I'm telling you, it works. And even if you find $0 that you don't think you can, cut or spend more or whatever, at least it gives you a better idea of where you're spending your money. And hopefully in the future, you kind of find ways to prioritize things differently. And that's how you do it. I just want to show you one other feature on this debt payment calculator. So if you go to this other tab, this payment schedule, this basically summarizes all of the activity that we already entered in here, right? So we have the Avalanche strategy. We're paying $730 a month. This is how it's ordered in here based on the Avalanche method. So we're paying off our credit card first, then our personal loan, then our student loan. It has all the stats of each of them here. The total interest that we're going to be paying. This here just shows us how it's going to be broken out every month. Okay, so if you had a question on how much I should be paying each month towards each of the debts, this gives you a pretty good idea. Now, obviously, this isn't going to make the payments for you. You have to go in and do it yourself, right? But just to give you an idea, so technically, I think the first date that we entered was September 1st. So it's just looking at the next month after, which is October 2024. If you remember here, we go back to the calculator, our minimum payments were $300. And what the Avalanche method or the Snowball method will do is take this extra money and again, put it towards the priority debt that we're doing. So in this case, it's the Avalanche, which is the highest interest rate first. And as you can see, the highest interest rate here is the credit card, okay? And it goes from highest interest rate all the way down to lowest interest rate. So this extra $430, you can see here that it's going towards this credit card because it's the highest interest rate. And then here, these minimum payments will stay for a pretty long time until we pay off the credit card, which is always really exciting. And you'll see that the Snowball amount transfers over to the next one. And now you can see that in a couple of months after this kind of got broken up, right? The Snowball from this month, but then this month forward, all the extra money snowballing forward. Now it's $540. It's all going to the second one, which is the personal loan, okay? Until it's paying that off. And then the Snowball sort of carries over to this one. And then all the extra money that we have towards our debt, $730 a month, what we're paying, it just gets slammed into the student loans until we pay it off, okay? And as you get closer to the finish line, trust me, you're going to want to find more ways in your mind. You're like, how do I just keep making this faster? You're going to try and find more ways to just keep pushing more and more money to it. That's what my wife and I did to pay down the $43,000 in a year. I really hope you enjoyed this video. Let me know down in the comments if you started to use this file, if you like it, what your feedback is on it, and I will see you in the next one.